This is Ag Matters PM from the Iowa Agribusiness Radio Network, your daily recap of the information that affects Iowa's farmers, producers, and consumers right here in the heart of the heartland. With reports from our award-winning team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Mark Magnuson.
Hello and welcome into Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Mark Magnuson. Today is Monday. It is February 9th, 2026. Thanks for taking the time to join us for today's show. In today's episode, I will be joined by Ross Baldwin of agmarket.net as we will talk about the overall direction of the cattle industry as far as the ag marketplace is concerned, take a big picture view. And I had the chance to speak with Ross in Nashville last week. And also, we will be joined by Sam Trainor of agmarket.net for our closing market coverage. But first, here's my conversation with Ross Baldwin of agmarket.net. Mark Magnuson for the Iowa Agribusiness Radio Network, and I'm joined today by Ross Baldwin of agmarket.net. Familiar face, you've seen him on the network several times in the past. And Ross is a native Iowan as well. He's making his way down here to the CattleCon show in Nashville. And Ross, could you remind me where you're located at in Iowa? And I know you have your own operation as well.
Yeah, I'm in a town, Anthon, Iowa. It's about 35 miles southeast of Sioux City, and my family has a cattle feedlot. My dad and two brothers run the feedlot and work there every day.
And Ross, I know that you are well-versed, of course, in terms of marketing and trying to cover the whole spectrum, but I know you really enjoy talking cattle. So what's it like to come to CattleCon? Have you been here before?
This is my first time, and it's been amazing. It's hanging around this many like-minded people, cowboys. It's been a fantastic experience. They kicked it off today at the opening ceremony, and they had Dale Jr. speaking. It was super cool to hear him talk about his life stories. So it's been a lot of fun on day one, and yeah, I'm looking forward to the next couple days.
And I wanted to talk some big picture topics with you as we think back to last Friday. We had the cattle inventory report. First of all, could you remind our audience why that is such a big report? Is it biannual?
Semi-annual, so you get it twice a year. We'll get another one this next July. But the significance of this report is it gives you the most insight on what the herd rebuilding looks like. And the all cattle and calves inventory came in 1% lower, 99%, or 99.7 was not a huge surprise, but the most surprising number was the U.S. beef cow herd. The expectations were 100.4, and it came in at 99%. So we still continue to get smaller in the U.S. on a herd size. Tightest numbers in over 75 years for the U.S. cow herd. The dairy number was up 2% versus a year ago. It was a little bit above what the expectations were, but not a surprise there, given what these dairy crossbreds, Holsteins, are worth right now. So we have seen a little bit of growth there. And the replacement heifer was a little bit higher, but it's a very slow rebuild. So I've been of the opinion that we have been in a slow rebuilding phase, and that's what this report showed. I think you're going to see it. I do think we are very close to bottoming the inventory in the United States, but there was nothing in this report that was negative or concerning for the cattle markets. And we were on the heels of last week's 240 cash trade, and we've seen futures today. We were 2 to 250 higher across fats and feeders, and we've been firmer yesterday as well. So cattle markets remains very strong.
So I was reading some predictions going into the report, and it talked about how we could see in the report the slowing of the liquidation of the herd. Do those numbers back that up then?
Yeah, I mean, granted, the U.S. beef cow herd was smaller. It was 99%, but yeah, it is. I think we are going to start to see these numbers slow down, and in my opinion is we're very close to the tightest numbers, the lowest numbers that we're going to see before we start to see the expansion. But it's going to be a very slow expansion phase, and that's where the cattle market remains on good footing. Anyone that's involved in cattle realizes from the time that you hold a heifer back and decide to hold it back, you're not looking at you're 3 years down the road before you start to see that impact. But we are close, I feel like, to bottoming this. But the overall picture, the numbers are very supportive for the cattle markets right now. They're tight. We're seeing it play out in the cash markets right now, and we're going to continue to get tighter.
So for the Iowa producer that's listening to your analysis of what we saw on Friday, does that mean that at least for the short term, it's going to be a similar picture to what we've seen here recently?
Yeah, I think so. If I look out into 2026 right now, the big winner is again going to be the cow-calf producer. They're going to see big returns like they've been seeing. The feedlot sector, it's been tight. I mean, there's still, obviously, we've had historical profit margins, across the cattle feeding sector, but with what feeder cattle cost, that's where that margin has shrunk, and it's tough right now with how expensive these feeder cattle are. But overall, I think if you look at the first half of this year, we should stay very well supported and see some very strong markets.
So what does that mean then also for a producer when you know that rebuild process is going to take a while? Like you said, the 2 to 3 year ramp up to rebuild the herd if and when it starts. When it starts. So what does that mean for long-term thinking then?
I think for long-term thinking, the producer, the number one thing you need to continue to focus on is managing your risk and at least have a floor in place. We all know that the U.S. cow herd is at 75-year lows. We all know that supplies are tight. We know all of these bullish factors of why we're here, but you need to protect against something that could come out from left field. We saw this last October, November when Trump started hammering on retail beef prices, how fast that market sold off. There was instances where feeder cattle over the course of a couple days were worth $500 a head less for producers just because of how Trump continued to bang that drum on getting retail prices lower. It didn't change anything in the big picture. We've since rallied back to almost the highs of where we were, but just be very mindful that it very likely could be something from outside news or something from left field that none of us can predict, and do something to protect your bottom line, because there are tools out there, whether it's hedging with futures and options or looking into insurance products. There are tools out there to really have a good floor underneath of your production, especially for the cow-calf guy.
And when you talk about those outside events or a bad headline that would go against the marketplace, sometimes as well, then those headlines can snowball.
Correct. And it seems like you look over the last couple of years when we went a long time where all of the news in the cattle market, it was one piece of bullish news after another as supplies were tightening, cash was screaming, and just all of it. And yeah, if you get into a market where it feels like that snowball of negative news just continues to build, and that unfortunately could be the reality for the cattle market at some point. But right now, these markets are strong. They sure appear like they're going to stay strong, and beef demand has been off the charts the last couple of years. That's obviously something that you gotta be mindful of with record high retail prices. But right now the market it's hitting on all cylinders and should stay in a very good spot. But just be mindful of the outside type headlines or news stories that could impact it.
And I know we're here at the Cattle Industry Convention, but I don't want anyone to get mad at me for asking you this next question, but I want to ask you as well, on the pork side then, recently we had Iowa Pork Congress in Des Moines, and the general sentiment there was, we're in a decent spot, we're in a decent place for profitability. In your viewpoint, is the pork industry getting a little bit of a boost from the cattle side?
Yes, to an extent, but pork demand, as it relates to high beef prices, does not usually see a big uptick in pork consumption when beef prices are high. When beef prices go high, actually, the big winner is poultry demand. There's a stronger correlation to increased chicken demand versus when beef prices are high versus pork. But the hog market has been in a good situation right now. You've had summer months at contract highs, very close to their highs, and we should see as we get into spring and summer that supplies tighten across the hog markets also. So yeah, the hog market's been in a good situation.
Ross, is there anything else you'd like to let our Iowa viewers, our Iowa producers know about when it comes to the cattle side of the market, or just anything that you're thinking about right now?
The one thing that I always think about is, everyone wants to know how higher price is going to go. And if we're all being 100% honest, nobody knows. So the thing that, while I sit here and say that the market's strong, the supply situation points, and with where demand is, it points to the possibility or a strong likelihood that cattle prices are going higher. But the one thing that keeps me awake, we're always wondering, is what could come and derail this market. And in my opinion, it's generally something from left field that we can't predict. And so I just go back to, if you're a producer, be very mindful and look back to this last fall when we saw feeders sell off $80 and fat cattle sold off $30 to $40 in about a 3-week window. We had days where they were back-to-back locked limit down days, and in feeder cattle, the daily limit on the first day is $9.25. The expanded limit, I believe, is $13.75. So with these massive limits that we have, the downside happens fast, and just have a plan in place. Whoever you talk to or work with, just be talking about how to have a floor in place to prevent a train wreck, really is what you're trying to prevent here.
He is Ross Baldwin with agmarket.net. As we always say, it's in the name. Head to agmarket.net and you can find all of the great resources and marketing information. Ross, thanks for the time here at CattleCon. Appreciate it, and have a great rest of the show.
Thanks, Mark. You too.
Thank you to Ross Baldwin of agmarket.net for joining today's show to talk about the overall picture view of the cattle market. And it is time now for the closing markets for Monday. And I'm joined by Sam Trainor of agmarket.net. Sam, at midday, we had quite a bit of red on the screen on the grain side. Is that how we closed today?
Unfortunately, it is. Yeah, saw quite a bit of red here across the grain complex here to start out this week. Did have some positive news here to start the day, though. At 8 a.m., we saw a flash sale of soybeans to China in the amount of 264,000 metric tons. Really thought that was going to support price action here throughout the day, but was not able to get anything going here. And it certainly seems that the market is just kind of in a wait-and-see mode until tomorrow's WASDE report.
So when we see what happened in the ag marketplace today, does that mean we overdid it a little bit maybe last week following the news from President Trump and his talks with Xi Jinping?
I think it's certainly possible, especially when you look at the way the market traded on Friday of last week. You know, we shot up initially after the 8:30 open and had a lot of positive strength following through on the rally that we had seen from Wednesday into Thursday. And then, like I said, followed through there Friday morning. But mid to late morning there, you saw a lot of sellers come in, and we did close higher on the day, but just barely, and well off the highs of the day. So I think maybe the market's starting to realize that this is just a consideration at this point from China. There's been no guarantees. President Trump just said that China is considering buying these additional soybeans. Now, today's sale certainly is a good sign of potentially more things to come. This is generally a time of the year where China does not buy many U.S. soybeans just due to the fact that South America is entering harvest, and also Brazil soybeans are quite a bit cheaper than U.S. beans currently. So the fact that they are buying beans here, as we saw this morning, certainly a good sign, but I do believe that maybe the news was a little bit overdone there last week, and maybe a little bit of buy the rumor, sell the fact going on.
What was the trade like today on the other side of the markets in the cattle and hogs?
It was relatively quiet on that side of the board today. However, we did finish a little bit higher in the cattle complex there. Obviously, Friday was Thursday and Friday both saw quite a bit of selling there in those markets. However, we did see a little bit of a recovery here today. The announcement last week, quadrupling Argentina beef imports certainly has had quite an impact on the market here recently. However, it is important to note that U.S. cattle inventories are still lowest in 70 years. So we're still a long ways away from replenishing this herd here, and fundamentals really haven't changed a whole lot, just a lot of headline risk in these markets as always. And then on the hog side, did see a little bit of more selling here today. They were down a little over $1 in the nearby contract. So maybe a little bit of a risk off day in the pork complex today.
Sam, what's the best way for our viewers to get in touch for more marketing information?
Best way would be to visit our website at agmarket.net, or you could give us a call here in Normal at 1-800-779-1515.
Sam Trainor of agmarket.net. Thanks so much for the time here today. Always appreciate it, and have a great rest of your week.
Thanks, Mark. You as well.
Thank you to Sam Trainor of agmarket.net for joining today's show. Let's take a look at the closing market numbers, which can be found on our website anytime at iowaagnet.com. March corn closes down 1.5 at 428 3/4. March soybeans down 4.5 at 1110 3/4. March soybean meal down 5.80 at 297.80. March soybean oil up $1.36 at 56.69. Chicago wheat down a penny at 5.28 3/4. Minneapolis wheat up a penny at 5.71. Kansas City hard red wheat down 2.5 at 5.28 3/4. March oats down 2 3/4 at 2.99 even. On the Merc, February live cattle up $1.55 at 239.30. March feeder cattle up 3 cents at 367.45. April lean hogs down $1.23 at 96.73. April pork cutout unchanged at 103.40. Class 3 milk down 15 cents at 15.23. That wraps up our closing market coverage for today and brings us to the end of today's show. You can find all of our content online at iowaagnet.com. From the Iowa Agribusiness Radio Network studios in Des Moines, I'm Mark Magnuson. For Riley Smith and Dustin Huffman, you've been watching Ag Matters PM.